You're listening to The Money Hour with your host, Tina Mitchell. Sponsored by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Now, in the studio, local mortgage and finance expert, Tina Mitchell.
Well, welcome back to The Money Hour with your host and mortgage expert, Tina Mitchell, right here on 1150 AM KKNW, the Saturday, July 30th show. I've built a network of elite industry professionals every week sharing their knowledge and expertise with you, my listeners. If you're hearing my show at a different time or day, you are listening to a rebroadcast. To talk with my guest in studio, if you'd like to chat with me, you can call the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. And having a conversation right now with Brook Anderson with Kaizen Financial Advisors. We're going to be talking about preparing for high cost in college. Brook, thanks for joining me back in studio.
Yeah, thank you for having me.
And you told me before we got started here with the show, you're actually going through this with your son right now. So it was a perfect time to bring this topic to my guest.
Yeah, no, it certainly hits home for me.
Yeah. And a little bit about Brook. He's a financial advisor with Kaizen Financial Advisors and return guest right here on The Money Hour. He is both a CPA and MBA with over 18 years experience as a finance professional in the Northwest. His firm, Kaizen Financial Advisors, is a fee-based advisor that provides comprehensive and holistic financial planning and wealth management services to individual clients. Kaizen advisors are fiduciaries and thus always work in the best interest of their clients. Brooks, again, thanks for joining me in studio. So here we are in the middle of summer break, yet we're only a month away from the start of college for many recent high school graduates and returning college students. So if you have kids that might be someday attending college, you have undoubtedly contemplated the high cost of college education, maybe even with a little pit in your stomach. My next guest, Brook, financial advisor, who will share some insights and strategies to help you prepare for the high cost in college. Let's go ahead and start right out to frame things up. Just how expensive is college right now today?
Sure. With my son's recent graduation from high school and his enrollment in college, I can personally attest that college is expensive. For those of you in a similar situation, I feel your pain. A couple of statistics. University of Washington right now, all in, is just over $27,000 a year. That's based on in-state tuition. And you might find it interesting that that tuition is only 44% of that whole $27,000 price tag. To put in perspective just how big that is, you'd need to save about $500 a month from birth to graduation to cover 4 years at the University of Washington. When we talk about private schools, the average sticker price is just north of $46,000 a year. In perspective, that's about 1.7 times what it costs to go to the University of Washington in-state right now.
Wow.
Yeah, it's daunting. As you might already be aware, for quite some time, we've also experienced tuition inflation that has far exceeded both core inflation and wage inflation, so it's likely to become even more expensive as we go forward.
So, Brook, I've heard that our state recently took some action to reduce the control of the cost of tuition in Washington. Can you tell my listeners a little bit more about that?
Yeah, sure. About a year ago, in fact, it was July of 2015, the state of Washington passed the Washington College Affordability Act. And the result of that was a decrease in tuition last year and also for this upcoming school year. And that covered all Washington public higher education institutions. It also limits future tuition increases to a growth rate that does not exceed the average hourly wage rate in the state of Washington, which I should point out over the past 10 years has been a little less than 1% per year. Mm-hmm. And be aware this cost restriction only covers tuition. And remember that example of the University of Washington, tuition is only about 44% of the total cost. The rest of it is not restricted by these guides. Lastly, this legislation just affects our public in-state schools. So you can think of University of Washington, WSU, Western, Central, Eastern, Evergreen State College, and our community colleges and our technical schools.
So from your experience, Brook, counseling clients, tell me some of the biggest mistakes that you see people make regarding college financial matters.
Sure. There's really four big ones that come to mind. The first is don't evaluate college investments in isolation and independent from the rest of your financial planning. College savings is just one element of your plan. Getting this wrong is a big deal. College choices can permanently change the course of your financial life, in particular, your retirement plan. My advice here is just don't jeopardize your retirement to fund college. And remember, if you have to, you can finance a portion of your education, but you can't finance your retirement. The second major mistake I see a lot is taking on excessive debt. Today in the U.S., 42 million people now owe $1.3 trillion in student debt.
Wow.
That's almost $31,000 per student. And even more shocking, that's nearly a 300% increase in the debt per student over the past 20 years. And the projections look even scary make it look even scarier if you look at those graphed out. Also, the costs associated with interest expense, delayed savings, and the loss of financial flexibility can be life-changing, and unfortunately in a very negative way. And by the way, if you missed this month's cover of Consumer Reports magazine, you might want to read it before you take on any school debt. I think the cover story tagline kind of says it all. It reads, quote, "I kind of ruined my life by going to college," end quote.
Wow.
And there's a bunch of horror stories in there of just what excessive debt can do to you.
Yeah.
Yeah. So again, I just encourage you, don't be naive around debt. Number 3 is focusing too much on a school's name recognition, which often comes with a big price tag, and not enough on the value per dollar spent. Studies have concluded that there are select school and degree combinations that fail to yield a positive return on investment, meaning that you'd be better off if you had just taken that money instead of spending on tuition and books and everything else. If you invested it and just held onto it and accepted a lower paying job, you would actually financially come out ahead. And that's scary. And that's something that's becoming more prevalent as time goes forward and schools become more expensive. So I would suggest doing the research and view education as an investment and demand a reasonable return on the money you spend. And if you're looking for some data around this in terms of what kind of wages you can earn and what degrees and from what schools and all that, the Department of Education has a great tool called the College Scorecard. It's on the website is collegescorecard.gov, and it gives you some insights on that. Lastly, number 4, I'd say, is not pursuing every avenue you can to reduce your cumulative costs. Don't just accept the 4-year sticker price and manage. You want to manage it and you want to lower that. Remember, this is one of the biggest investments you'll ever make, so you want to really take control of it. Yeah,
some great tips and great information that you're bringing in. So I want to go to your last point that you mentioned, pursuing every avenue to reduce costs. Can you share some of the ways that my listeners can reduce the cost of college? Let's talk about saving money, because that's what the show is all about.
Sure. So I'll go through 10 of them that kind of come to mind. The first is start with credits before you begin. And this can be accomplished via programs like Running Start or obtaining college credits through AP or IB testing programs. And again, you can start obviously without paying a college rate of tuition to acquire those credits. Also, consider integrating some community college work before or during your college pursuits. The credits are likely to be less expensive, but be sure that you double check the transferability of those credits before you enroll in a community college to augment your other schooling options. And also take advantage of in-state tuition and possibly live at home or off campus, which is generally less expensive than being out of state or living on campus. Number 4 is to seek private scholarships. They take effort, but you won't receive anything if you don't try. And my recommendation would really be to target small markets. And what I mean by that is where the number of applicants is restricted by something that you might qualify for. And a typical one might be a geographic area requirement. Maybe it's only from your school district, or maybe it's targeting scholarships at your parents' workplace. And so it's a limited pool. You'll generally have little bit better luck than attacking some of the big national programs. And also stay on track to graduate on time or early. Unfortunately, 5 and 6 year graduation timeframes is not uncommon.
Good. That's
and
wow.
Good. And very expensive.
Yes.
So is number 6. If you're really ambitious, take the maximum number of credits that a standard tuition covers, which might allow you to finish early. Take advantage of the fact it's one cost that may cover regardless of how many credits you take between a certain a range or limit. And also use bunching as well as other strategies to maximize financial aid. Bunching is where you have an older sibling who delays the start of their schooling until their younger sibling is ready to go, because having 2 kids in college at the same time proportionally increases your financial aid. And there's other strategies that you can use as well. And especially also if you have any kind of financial hardship or special situation, make sure you challenge your financial aid package. You may end up getting more than what you'd expect. Number 8 is take advantage of special tax accommodations like the American Opportunity Tax Credit, which will give you a $2,500 tax credit if you spend $4,000 or more on qualified expenses. There's some limitations around that, but it's certainly available to many. Number 9 is take summer courses. Sometimes they're less expensive than you'll find in the fall or winter terms of certain schools. And then lastly would be shop for reasonable total cost of attendance. And if applicable, you should incorporate merit opportunities to offset costs as well. And for this, you'll really need to know and understand how your students' GPA and test scores can generate material merit opportunities and scholarships. So as a result, you don't necessarily want to rule out all private schools just because they have a high sticker price. Oftentimes, the combination of merit scholarship awards and whatnot can actually make the cost equal or even potentially lower than a public option.
Got it. So you touched on the financial aid, high level of how does it work, and how might one figure out if they're going to qualify for that financial aid, Brooke?
Sure. Kind of from the 30,000 foot level, it's actually very complicated, but I'll just give you kind of a high level overview. Financial aid is determined by formulas that considers your income, your assets, and the cost of attendance for the school that you're looking at. And this data is collected by probably some documents you've heard of, the FAFSA. And also the CSS profile, that's the equivalent for private schools. About 300 schools use that form as well. And these financial aid formulas calculate what is called your EFC, or your expected financial contribution. This is the part of your college expenses that you're expected to cover through your own resources. And your maximum financial aid will always equal the cost of attendance for that particular school minus your EFC, or your expected financial contribution. And the calculations for the EFC are complicated, but in general, the formulas work out such that it's about 47% of your income above a certain exemption level that is deemed to be available for college. And on the asset side, it's about 5.6% of your assets, again, that are going above a certain exclusion amount. And by the way, your primary home is not included as one of those assets.
Okay.
And the best way to estimate that is to use an online calculator. I recommend the FAFSA Forecaster. It's actually found on the FAFSA website. It's very helpful, and it gives you a very good idea of what that number will look like. And the one thing I'll point out is you want to be aware that there are many strategies out there to maximize financial aid. A lot of them involve things like using insurance products and moving assets into insurance products to avoid the calculation within your asset base. And in general, I would not recommend going down those paths unless you truly need that insurance.
Yeah, and there's so many things to go over that, really picking up the phone and having a conversation with you and finding out all the options available to your specific needs is really important. So if you have sufficient resources and time, what are the best ways to save for college, Brooke?
Sure. For most people, not all, but a 529 plan generally proves to be the best way to go. 529 plans are sponsored by individual states, but regardless of what state you use, you can use those dollars for a school that resides in any state. This allows you to contribute after-tax dollars to invest for future educational expenses, and your investments will grow tax-free, and the proceeds are tax-free when you use them for qualified educational expenses. Works very similar to a Roth IRA, but for college expenses. And the one point I'll make here, too, is you want to really shop around. There are some very good plans out there, and there's also some not-so-great plans. So make sure you focus on low cost and great management.
Perfect. So as I wrap up my time here with you, Brooke, any financial thoughts you want to leave with my listeners?
Sure. I'll just kind of summarize a few things. 1, select your school with a cost benefit in mind. Make sure your investment is worth the money you're putting into it. 2, if you're able, start early. College is very expensive and it'll take considerable time and dedication to save adequate funds to cover a degree. 3, expect costs to be more than you anticipate. School inflation continues to be problematic. And don't forget about indirect expenses. There's a lot more to expenses than just tuition, books, room and board, and fees. And lastly, whatever you do, avoid excessive debt. You'll thank yourself later.
Brooke, thank you. Amazing topic. I appreciate you bringing that in. And it's perfect timing for you. Perfect timing, I'm sure, for a lot of our listeners. So thank you.
Thank you. I appreciate it.
Coming up next in the Money Hour, what's happening with transportation? Judy Claiborne, State Representative, right here on 1150 AM KKNW after this short break.